We live in a fantasy world now. Reality has been destroyed.
This is the time that you really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisade's Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Peter Schiff, CEO and Chief Economist of Euro-Pacific Asset Management, and also the chairman of Schiff Gold and the host of Schiff Radio. Thanks for joining me today, Peter. It's a pleasure to have you.
Oh, my pleasure to be a guest on your show.
So, Peter, it seems more and more that all eyes are always on the Fed. Every FOMC meeting is watched by investors extremely closely and every word analyzed. So is the Fed really oblivious, do you think, when it comes to monetary policy and its ability to get a grasp on inflation?
Well, it's always hard to say because I don't really know that anyone at the Fed is being honest. So what they say in public and what they actually believe or maybe discuss in private could be very opposite. But if you take them at their word, then they are oblivious. Right? If they are being forthright, then they're clueless. But to the extent that they do know how bad things are going to be, they may feel it's in their best interest not to let the public know, and to put a positive spin on everything. And I also think that the FOMC members probably think that what they say may itself have a big influence on the economy or the markets, and they don't want to cause what they're afraid of. So if they think there's a major economic disaster coming, if they think inflation is going to run out of control, they're not likely to admit that because they're afraid that their admission will end up producing the crisis that they think might be coming. And so they don't want to cause it. And probably in their mind, if they're really worried about a crisis, they think the best way to prevent it is to deny it and try to get everybody all optimistic, because I think they place a lot of weight on confidence and perception. But also another factor that's there is expediency, because the Fed is very political as much as they deny that they're political. And they're always trying to kick the can down the road. I mean, they don't really care if eventually, the road becomes a lot worse because of all the can kicking. But I think from their perspective, a problem later is better than a problem sooner, even if the later problem is bigger, because Powell knows that he's not going to be Fed chairman forever, right? And, the president is not going to be there forever, ever either. Biden is, maybe this is his only term. And so it's, we just got to keep everything from falling apart until it's somebody else's problem. Mm-hmm. And so this is what I think the Fed is doing with what it's saying. Oh, don't worry about everything. We got this covered. The economy is strong. Yeah, we're going to get rid of inflation. It's a problem, but we're going to solve it. And it's not going to be a big deal. Yeah, there may be a slight recession. Maybe it's a softish landing, but nothing to worry about. We got the situation under control. That's basically the message they're sending.
Yeah, and it's interesting to see when Powell comes out and says, well, there's no way to know that we might have a recession or we could never know how deep it might be or how long it might be. So as you're saying, it's really that diffusion of really trying to admit something or see something coming, like inflation not being transitory, as you're saying, being able to kind of have that plausible deniability.
He's backpedaling now, because before he was like, oh no, we don't think there's going to be a recession. And then he was like, well, we still think there'll be a soft landing, but maybe it will be a little bit more difficult. Maybe it'll be softish. And now he's like, well, no one really knows, right? Maybe we're going to have a recession. Who could say? He's like, it's impossible to forecast. And then he's like, look, even if we have a recession, nobody can tell if it's going to be a shallow one or a deep one. And, that's just not true. I mean, if he can't tell, then he's incompetent. And if he can tell, then he's just lying about it, right? Mm-hmm. But just from experience or from common sense that when you have these boom and bust cycles that are a function of monetary policy, you keep interest rates artificially low, you engender a bubble. You get a lot of speculation, asset prices get bid up, consumers behave recklessly, businesses, everybody speculates, everybody spends, savings go down, real investment goes down, now investments go up. So the whole economy gets all screwed up during these bubbles. Then when the bubbles pop, now we have to correct the damage, and you get a recession as, prices are, assets are repriced, businesses that never should have started go out of business. You have this unemployment as people lose their jobs at the companies that go away, and there's some transition before they get new jobs at other companies that start up or expand. So proportionately, the bust is in proportion to the boom that precedes it. So the longer the boom, the more mistakes that are made, and the deeper the recession that ends up being necessary to correct them. So given the fact that we've just had the biggest boom ever as far as from monetary policy, we've never had rates so low for so long. We've never had this type of expansion in the Fed's balance sheet. So this is the biggest artificial boom that we've ever experienced. And it stands to reason that it would be followed by the biggest bust. Just like, we had a severe recession in 2007, 2008, following the bursting of that bubble. Well, this is an even bigger bubble than that one was. So if we call the 2008 recession the Great Recession, what are we going to call this one? Because it's going to be a lot greater than that one.
Mm-hmm. I'd like to stick with the Fed for just a little bit longer. Powell said that current monetary policy isn't restrictive enough. So why not raise rates now? Are they waiting for current rate hikes to work their way through the system? Or, why not address that problem, currently as he sees that?
Well, he's correct about that. Rates are not restrictive enough. In fact, they remain stimulative. They're just not as stimulative as they once were. And then that is a problem. If you think about it in the terms of a heroin addict, if a heroin addict is used to a certain amount of heroin and then you reduce the dose, right, that could be a big problem for that addict. But that's not going to get the guy off of heroin. Right? He's got to actually stop taking it completely. Mm-hmm. Now, that would produce an even bigger withdrawal if he were to go cold turkey on the heroin. And so that's really what the Fed is doing. The Fed knows that in reality, we have to get off the cheap money. The Fed has to stop stimulating. But the Fed is reluctant to remove the stimulus all at once. And I think maybe it's hopeful that if it just gradually weans us off it a little at a time, that it's going to work. Right? So the Fed is still stimulating the economy, just not as much as it was. Mm-hmm. But I think that if you have an inflation problem, right, if you continue to fuel the fire, it's not going out. Right? They're pouring less gasoline on the fire than they were. Mm-hmm. But they're still pouring gasoline on it. So it ain't going away. Inflation is a huge problem. The Fed has spent more than a decade, cultivating this fire, putting all the kindling on it, and now it's huge, and it's not going to go away. And the reality is, there is no will in Washington to get rid of inflation. I mean, look at this omnibus spending bill that they just passed with big increases in spending. Where's the money going to come from to pay for all this spending? It's going to have to be created by the Fed. It's inflation. Congress has now decided that the way it's going to finance even bigger government than what we have now is through inflation. Inflation is the government's method of paying for spending. So inflation is going up. It's not going down. And ultimately, the Fed is going to reverse policy and go back to quantitative easing to accommodate these enormous deficits that are the result of reckless government spending.
Peter, we constantly hear from central banks that consumers should be scared of deflation. So why is this? And is it really the central banks that should be scared of deflation? And is there maybe, a nuance there to understand the difference between the average consumer and, let's say, an investor when we come to think about deflation?
Well, first of all, you have to understand the terms, because the real definition of deflation is a decline in the money supply, and inflation is an expansion of the money supply. But if you're thinking of deflation as consumer prices coming down, so that the CPI is lower at the end of the year than it was at the beginning of the year, nobody should be concerned about that. That's a good thing. Prices coming down are always a plus, because we all want to buy stuff cheaper. That's why we react to sales. Something's on sale, we're more likely to buy it. We're not more likely to buy it if they jack the price up. In fact, we may not be able to afford it if they jack the price up. And if you can't afford it, one way that you may be able to afford it is if the price comes down. I mean, there are people who don't buy things until the price comes down, and then they can afford it. But the idea that we need prices to go up, that was invented by the central banks. Look at the problem in Japan. They spent the last several years saying we don't have enough inflation, and they kept printing money and buying government bonds. And now they have a huge inflation problem. Inflation is now almost 4%, which is the highest in 40 years, and moving higher. And now what are they going to do? Because they've taken on so much debt, because they said we needed this to get more inflation, as if prices going up 0.5% a year was somehow a problem. It wasn't a problem. I mean, it's a problem now that they're going up 4% a year. And the bigger problem is next year they could go up 6%, or who knows? I mean, inflation is now never going to go away in Japan, I don't think. I mean, inflation is going to be a way of life for most of the world, because central bankers have pursued inflation as a deliberate policy because they claimed that we didn't have enough of it. Well, now we have much too much of it, and there's no way to put the genie back in the bottle unless they're willing to suffer the consequences, which is to force collapses in asset prices, a surge in bankruptcies and defaults, and force governments to cut spending rather dramatically to all sorts of constituents. They're going to have to cut programs that they wouldn't have dared, dream about cutting. In the United States, they got to cut Social Security. They got to cut Medicare, Obamacare, government pensions. I mean, all of these line items need to be cut. People who are getting checks from government, who are now getting bigger checks because of the social, inflation is kicking in. They actually have to be told, we can't send you the money we promised. We have to send you less, or in some cases, we can't send you anything at all. This is what has to happen. I mean, alternatively, they can have massive tax increases on the middle class, but I don't know that you could get blood from a stone. I don't know that the middle class is even able to pay higher taxes. They could try to raise taxes on the rich, but the rich are already paying most of the income tax. It's hard to raise taxes on them. And if you raise them too much higher, you might not get any revenue because they'll stop working. You'll just tax away whatever income they had, because they're not going to work if you're going to confiscate the fruits of their labor. You do have a lot of Americans who don't pay any income tax at all. So, I mean, that's, where they're going to have to look, although they do pay payroll taxes. But, I think the real solution is a reduction in government spending. But look, I mean, we just appropriated, or didn't appropriate it, we agreed to spend another, $47 billion on the Ukraine. Where's that money coming from? We don't have that money.
Yeah, another 47 billion there. The omnibus, I think, was 1.7 trillion, as you're saying. It's insane to think about all of this spending that is supposed to come out of nowhere. And as you say too, when you're trying to raise taxes, that doesn't account for being able to actually cover that amount of spending, right?
No, well, the only reason the public supports the spending is because they don't think they have to pay for it, because their taxes aren't going up. But inflation is going up. That's how they're paying for it. They just don't realize that, because the politicians pretend that, whoa, inflation, that's Putin's fault. That's the pandemic's fault, right? They point fingers at other people. but the true source of inflation is the government. It's the Federal Reserve, it's Congress. I mean, that is the engine of inflation. And inflation is going to keep getting worse. And that means they're just going to keep having to blame more people for it. But they're not going to accept responsibility for creating the inflation in the first place.
So, Peter, the Fed has constantly, seek this target of 2% inflation, let's say for the last decade. And now that we have over that level of inflation, let's say 5% or higher, does this create a situation where we need to get back under 2% to average back to be able to, claim that 2% is our target? How many years are we going to need to be under 2% to achieve that target?
Well, first of all, when we just got above 2%, Powell claimed that we needed to stay above it a little bit for a while to average it down because, we had all these years where it was under 2%. And so we needed to make up for that, which was all a bunch of nonsense. Mm-hmm. But clearly, they're going to toss that out the window because we've just had 2 years where prices are up, let's say 15% in 2 years. How many years of inflation way below 2% will it take in order to average that back down to 2%? So so that's out the window right now. The Fed doesn't care about an average inflation rate of 2%. It just wants to see if it can get back down there, which of course it can't. But this whole 2% target was just made up out of nothing. The way it all started was the central bank in New Zealand, under a guy named Donald Bash, I think his name was, but he said that we're going to have a 2% ceiling on inflation. That's our metric, that we're going to keep inflation below 2%. And if it gets up to 2%, it's too high, and we're going to take action to bring it down. So that's where it came from, 2%. It wasn't a target like, hey, we want 2% inflation. It was just that if it ever got that high, we would have to do something about it. That was the trigger point for where we started to worry. So if inflation was 1%, okay, no big deal. We'll just watch it, but we're not going to take any action. Oh, it got near 2%. Oh no, we got to do something. We got to keep it below 2%. And that didn't mean that prices couldn't go down. If prices went down 1%, well, that was even better. Mm-hmm. Because that was even further below the danger zone of 2%. But somehow other central banks kind of took that 2% number and adopted it as a goal, like a target, like we want inflation of 2%. So if it's only 1%, well, that's a problem we have to solve. We need to hit that target. But this is all, BS. That what they were trying to do was come up with a pretense for creating inflation. They wanted to print money to artificially stimulate the economy, to finance government spending, to bail people out. They couldn't say that, so they justified it by saying, well, we just need to do this because we need to get inflation up to 2%. But we're probably never going to see 2% again unless they completely throw out the CPI and come up with a new one, which I wouldn't put that past them because the one we got now is inaccurate. If we were measuring prices today using the CPI of the 1970s, we would have been looking at high double-digit inflation for the last year or so, not high single-digit inflation.
Mm-hmm. Well, kind of on that theme, Peter, of these, let's say, flawed metrics, the Fed seems to really kind of rely on let's say, the unemployment rate. And on a recent interview, you stated that we have over 100 million working age Americans that are no longer in the labor market. So after doing some digging, I found a stat that in 2020, there was approximately 214 million working age people in the US. So how do we get nearly a 47% unemployment rate right now?
Yeah, well, again, just because they're not in the labor force doesn't mean they're not unemployed. But a lot of those people are unemployed and they're just not being counted as unemployed because, they would probably take a job if they thought there was a job out there that they were qualified for. I think a lot of them have given up, or if they thought there was a job out there that could pay enough money to warrant giving up all the government programs, because if you go from welfare to work, you face a very high tax break because not only do you pay payroll taxes on the money you earn, but you give up the money you're getting for nothing. That's maybe Medicare, food stamps, housing vouchers, welfare payments. And you can argue that the highest tax bracket, the highest marginal tax rate that there is in America is going from welfare to work. And so that is a major impediment. So a lot of people aren't working by choice because they would rather not. I mean, I'd like to take away the choice so that, look, you work or, you got nothing to eat. If there's a job out there, then you go take it. You can't just say, well, I'd rather get my food stamps and my welfare. No, you go take that job. But, we've created this thing. It's supposed to be a safety net, but it's not. It's a hammock. A lot of people are just kicking back in that hammock. Now, of course, there are also some people that are actually working. They're just not counted, right? They're under the table. They're getting paid in cash. They're doing something, on the side, or not on the side if they don't have a regular job. But there's probably some people who are in the labor force that legally we don't think they're there because they're not paying taxes, they're not showing up in the numbers, but they may be doing some work. And of course, that's actually better than them not doing any work. The fact that there are people, I'd rather have people working under the table than not working at all, because at least, you get the benefit of their labor. They're doing something productive with their time. So, if we went to a digital currency or something where they couldn't get paid in cash, then we may lose the benefit of that work because they just wouldn't do it. They just collect welfare. But the way the government keeps track of all these statistics, whether it's unemployment, inflation, economic growth, it's all skewed to try to put a brighter picture on, a gloomy reality. Because the politicians like to point to these numbers and say, see, look, we're doing good. Look at this. Look at these numbers, right? And to me, it's almost like, a kid who's, grading his own report card, telling his parents, look, I got all A's. Yeah, well, I mean, if you graded yourself, what does that mean, right? Did you actually learn anything? Probably not. And so we're letting the politicians grade themselves because the government comes out with their own report card, and then we're surprised that there's good grades there, but they constantly change the methodology for how they calculate everything, and they do that to make the numbers look better.
So, do you think the labor market is to blame for it, Peter?
What do you mean?
Well, considering that we have, all kinds of people that are not working. Are there not enough jobs for people to go to? Or is it, as you're saying, basically the change in tax rate from going to welfare to work, the major issue, or let's say the major obstacle for getting these people back to work?
Yeah, I mean, for a lot of people, that is a problem. Other people just don't even have the skills for the jobs that are available. And a lot of the unskilled jobs are not there because the minimum wage and other rules and regulations basically eliminate a lot of those jobs. I mean, you experience this in life where a lot of things are automated, a lot of things are now self-serve, where human beings could be doing a lot of these things. It would be a more pleasant experience if there were more human beings involved. But the government has made hiring those people too expensive. Mm-hmm. And so the market has figured out ways to do without workers because the government has artificially increased the cost of employing them. And so we have, priced a lot of people out of the labor market. And the problem with this is that when you price a lot of people out of the labor market, they never acquire the skills that they would have acquired had they had an entry point. Because a lot of the people that don't get jobs because of the minimum wage are very young people, teenagers, early 20s. And when you permanently remove the lower rung from the job ladder, well, now these people never get a foot on that ladder and they never get to climb up. And so, people are saying, oh, it's not fair if people go and get a job and they only make $4 an hour. How can you live on $4 an hour? Well, you can't. That's not the purpose of those jobs. It's not so that you can live on them. A lot of those people are still living with their parents. I mean, they're working for gas money. They don't need to pay rent. with their minimum wage job. They don't, maybe they just need to be able to hang out with their buddies on Saturday night. They don't need a lot of money. What they need are skills. That's what they lack. And the best place to get skills is on the job. So when you're young, you take a low-paying job. And as a result of that low-paying job, when you get older and you have more skills, you can earn more money. Then you move out of your parents' house. Then you can get married and have a family because you're no longer at a low wage because you are more valuable to employers because you've acquired a lot of on-the-job experience and now you're more valuable, right? But what the minimum wage law does is it makes it impossible for those young people to get that job, to get those extra skills. So when they're in their 30s and their 40s, they're still unemployed and they still have no skills. So, they're just a permanent underclass and maybe they turn to crime or something like that. But it's very unfortunate that the government has done this to people. Mm-hmm.
Peter, I'd like to switch a little bit to talking about, this coming crisis that really a lot of experts have talked about coming for, 13, 14 years, even just before 2008. So, I want to get your thoughts towards how you think this is going to play out. What causes the Fed to try to come to the rescue, let's say, and if you see maybe the sovereign debt crisis starting to be the biggest problem on the horizon?
Well, eventually the Fed will try to come to the rescue. I mean, the Fed has always been the cavalry, at least in modern times, right? And everybody looks to the Fed because the solutions are so simple, right? Just print money. But what people just don't get is that the Fed's only tool is inflation. How does the Fed prop up a weak economy? How does it bail out failing businesses? By creating inflation. That's been their go-to solution for every single problem. Well, here is the reality and why the game is different now. The problem is inflation. They've created so much inflation that the solution has itself now become the problem. And the degree to which we have inflation, that inflation is also creating other economic problems that the Fed is now confronted with. And so if we have a crisis that has been caused by inflation, how can you solve that problem with more inflation? You can't. So the Fed has no tools that will work. Now, the tools it had before didn't work either. Mm-hmm. All they did was kick the can down the road. They just paper all the problems over with inflation. But that simply delayed the day of reckoning until the inflation became the problem, which now it is. But all those years, it wasn't a problem. It actually was a problem because it was secretly doing a lot of damage to the structure of the economy. A lot of people didn't know that because they were just looking at consumer prices. They weren't looking beneath the surface to see all the other mistakes that were being made because of the inflation that was being created. So now we're at the point where we have to pay the piper. And it's a big bill, right? They've been playing this song for a long time. So people just don't get how bad this is going to be. I mean, people don't realize that the Fed has spent the last decade or more creating this problem. They weren't solving problems. They were creating problems. And in so doing, they were helping to temporarily provide some relief. Like, let's say you break your foot and you go to the doctor, and instead of healing it, he just shoots it up with some kind of morphine so it doesn't hurt anymore, and you can keep walking on it. Oh, great, doc, thanks. My foot doesn't hurt anymore. But now you don't feel the pain. So the pain is like a way of sending your brain a message. Hey, don't walk on that foot. There's something wrong with it. Mm-hmm. That's why it hurts. But if you numb to the pain, then you just keep doing more damage, right? And eventually it's like, oh, maybe we have to amputate that foot. I don't know. We should have repaired it when we had a chance. But this is what we've done. We haven't done the necessary, right? We haven't swallowed the bitter tasting medicine to, really cure the economy. We've just, taken some narcotic to numb the pain so that we don't realize it, right? And so, but we're at the end of it. I mean, you can tell where, what's happening now. There's like, they can't go to negative interest rates. They can't do more QE. The whole thing is blowing up. That's why inflation is as high as it is. It's a sign that we've reached the end of the road.
Well, as we think about how the last part of this bubble has been blown up, would it have been a better idea to let every individual state fund their relief efforts for COVID rather than the Federal Reserve coming to the rescue?
Absolutely. I said that at the time. The Federal Reserve should have done nothing. The U.S. government should have done nothing with respect to COVID. And the states should have been free to decide their individual policies. And I think if most states knew that there was no federal money coming, the states would have taken a very different approach. I mean, I think what they did in Sweden would have probably been more likely in the US. I think the states would have just told people, tough it out, right? I mean, if you're old and you're in one of these groups where you could really have a problem with COVID, if you have these other factors that elevate the risk, you're diabetic, you're overweight, some of these other, you're older. All right, you guys stay home. And a lot of the older people weren't working anyway. They were retired. So, just tell those people, stay at home, and everybody else just go about your life. Maybe wear a mask, whatever, but if you get COVID, you'll be sick for a little while, but you'll get better. It's like, because the only reason that we shut down the economy is because we thought everybody was going to get bailout money. Everybody was going to get PPP money. Everybody was going to get extended unemployment benefits. So, hey, it's no problem. We can all take a long vacation and wait for COVID to blow over, and nobody's going to suffer because everybody's going to get paid, except they're going to get paid by the government instead of their employer. Well, it doesn't work, because they weren't working. It was all inflation. But I think if individual states knew that they were on the hook for the consequences of any lockdowns that they required or anything like that, they would have thought twice. I mean, nobody did a cost-benefit analysis. Everybody thought about the benefits of a lockdown. Yeah, maybe we'll have fewer COVID cases. Okay, but at what cost? Well, who gives a damn? There is no cost, right? It's all coming from the government, federal government. It's all coming from the Federal Reserve. So, I mean, it was a horrible moral hazard that was created. And we had the worst combination of monetary and fiscal policy imaginable. We prevented people from working, and then we gave them more money for not working than what they earned when they were working. I mean, you couldn't imagine a more inflationary combination of policy than that.
Well, I think this is a perfect example of how, really the free market has not been allowed to exert itself, to keep the checks and balances that a free market would, that choice would. So how perverse has, let's say, the education system or these pension systems become because of government intervention? Has this just, driven up costs and really risk as well because of the government guaranteeing these assets?
Well, of course. I mean, first of all, education is very expensive thanks to government. Government has bid up the costs by providing people with subsidies and guaranteed loans and direct loans to go and pay whatever price a college or university wants to charge. There's no real free market forces at work there. And even, K through 12, you have all these government-run monopolies on education where the parents really have no choice. They don't have the money for private school, and they're being taxed to, pay for the public schools. And the public schools have a captive audience. So, their real goal is to enrich the educational establishment, which is the bureaucracy, the teachers' unions. I mean, no one really gives a damn about the kids because there's no free market competition to win the business of the parents. So we would have a much better education system. It would be far superior in quality and much lower in cost if the government got out of it. But of course, no, everybody wants more government. And the more the government destroys education, the more the public thinks we need more government to, fix it when the government broke it. They just don't understand that. You mentioned the pensions. Yeah, a lot of the pensions are underfunded. Look what just happened with the Teamsters pension and a massive bailout. Why are these pensions underfunded? Because the government guarantees them. Without government guarantees, they wouldn't be underfunded because the administrators would, have to make sure that the contributions were adequate to meet the demands. If not, they would have to reduce the benefits or increase the contributions. Plus, I think the people who are in charge of making the investments in the pensions, they've been led astray by the Fed. They've been investing in overpriced stocks. Meanwhile, they haven't been able to earn yields on bonds because the Fed has artificially suppressed interest rates. Traditionally, that's where a lot of the returns on pensions come from, is to come from interest that they earn on their bonds, because interest payments are more certain. And you can match your income with your liabilities when you know what your income is. But when all of it is just gambling on stock prices, you have no idea, where stocks are going to go in the future. So a lot of these pension funds now just gamble. And of course, when they bet wrong, well, now the government comes in, which is a terrible moral hazard. That's what they did with housing, with Fannie Mae and Freddie Mac and all these guaranteed mortgages. And with the whole banking system, for that matter, all the bank accounts are guaranteed by the government. So there's tremendous risk in the banking sector that would not be there absent these government guarantees. If the government didn't guarantee your bank account, you would care about what the banks did with your money. And so the banks would know you would care, because they would have to compete on soundness, on safety. But they don't compete on those things because no one gives a damn, thanks to the government.
Mm-hmm. Yeah, these examples of free markets being allowed to exert themselves, it's just so crazy to think that the government has to step in and intervene at every step of the way. You recently gave the example of Alcoa on one of your recent podcasts being broken up and not being allowed to succeed because it was a great company that was efficient, right?
Yeah, I mean, the people complaining about Alcoa were not the customers, it was the competitors. Mm-hmm. But we don't need competition to benefit competitors. We need competition to benefit customers, the public. And if the public is served with fewer competitors, then that's fine. Let the market function. A lot of companies were broken up that were doing a very good job, and they should never have been broken up. And the losers were the American public that was denied the benefits of the efficiencies that those companies had been able to create. And you have competitors that aren't able to be as efficient, looking for the government to step in. It's like I'm running a race and there's a guy in the race that's faster than me and I'm trying to get the government. Well, can't you break one of his legs so I can catch him? It's not fair. He's so quick. He's got such strong, look, if somebody is better than the other competitors, then good, and eventually, somebody else will come along that will be able to compete. But you can't keep crippling the people that are doing well because, that you think that gives them an unfair advantage to others. But, look, another example, look what's going on right now with Sam Bankman-Fried and FTX, because they're saying, oh, look at what happened. This just shows we need more government regulation, as if regulators would have prevented this. Look, the people that were dumb enough to give this guy their money would have been dumb enough to do it even if there were government regulators involved. In fact, he was paying off all the politicians. You don't think he would have paid them off even more if they were regulating them? Look, Bernie Madoff was regulated by the SEC and the FINRA, which at the time was the National Association of Security Dealers. So he had two regulators. Yet he got away with his scam for far longer than Sam Bankman-Fried did, right? Under the watch of regulators. So without any regulators at all, FTX collapsed a lot quicker. In fact, the original Ponzi scheme, Charles Ponzi himself, his scheme only lasted for not even a year. It fell apart. It got ferreted out by the media, by investors. We didn't need government to expose Ponzi. He was exposed in the free market because there was no SEC or FINRA back then when Ponzi was around. And so the damage that Ponzi did was contained because he didn't have government regulators protecting him the way Bernie Madoff did. Bernie Madoff was able to get away with a much bigger Ponzi scheme than Ponzi because he was regulated. And so that's what we need. We don't need more regulation. What happened with FTX doesn't prove we need more regulation. We didn't even have an SEC until, I think, 1932. The New York Stock Exchange started in 1792, 140 years We had no SEC. We were better off without the SEC. There was less fraud than there is now when the government wasn't there, because the government is always corrupted. Whenever you have regulators in an industry, they become corrupted and captured by the people they regulate. And then what happens is the regulated industry ends up becoming almost cartelized by the government, and they use government regulators to keep out competition, to make it harder for new companies to enter the industry and compete so they can have outside profits, excessive profits. Meanwhile, to the extent that they are ripping anybody off or committing fraud, they just bribe the regulators and they keep on doing it. And now the public just assumes, well, there must be nothing bad going on because, the regulators keep saying everything is good. Whereas if there were no regulators, then the public would be more suspicious and they would actually do better due diligence.
Yeah, and it's kind of funny in that whole world of driving pensions up the risk curve. I think the Ontario Teachers Union also invested in FTX,
yes,
and lost a bunch of money.
Yes, so now the government could be on the hook for those losses.
And I think you could almost make the argument that the rising interest rates kind of drove this blow up in FTX. And I'd like to get your thoughts on, what this new era of higher inflation really means for investors. How do they need to change their strategies in order to deal with this new era of higher inflation and higher rates?
Yeah, well, what they have to come to terms with is, to the extent that they made money in the last decade or longer, it's not because they were smart. It's just because they were lucky to have ridden the bubble. Mm-hmm. It was all a function of the cheap money and the artificially low interest rates and the fact that inflation hadn't reared its head. But now that we're in a different environment where inflation is here, it's high and it's going to get higher. Interest rates are no longer zero. They're going to get higher, even if real rates are not. Nominal rates are going to be rising. And the air is coming out of the bubble. In a high inflationary environment, distant earnings don't have nearly as much value, which means that companies that don't have earnings today or have a low earning and trade at a high PE, that's unsustainable. When you think there's very, very little inflation and the cost of money is next to nothing, if there's a company that may have a profit in 10 or 20 or 30 years, the present value of that profit, could still have a lot of value today. But in an environment where you have higher inflation or high interest rates, the value of those future earnings is dramatically reduced when you discount it into the present, which is what a stock price does. So people are not going to be betting on the come the way they were during the bubble. So as an investor, you have to go back to basics, be a Warren Buffett kind of value guy. You have to understand the business and what am I paying for this business? And am I paying a good price? And how do you know you're paying a good price? Well, what's the dividend yield that I'm getting? How many years of earnings am I paying to buy this business? And those are the things that nobody even cared to ask when it was like, well, what's the name? What's the symbol? Is it going up? Oh, I'll buy it, right? Mm-hmm. Does it have a sexy story? We're not about the sizzle anymore. It's about the steak. A lot of these stories were all sizzle. There was no steak there when you got right down to it. And so it's, old-fashioned stock picking, value investing. Forget about the indexes. You're going to lose money in the indexes because they're dominated by these overpriced stocks. I think for most people, it's going to be international, not domestic. The U.S. is really where it was at the last decade or so. We have the biggest bubble. I think the dollar is going to fall sharply, and so that's going to undermine the real returns on U.S. stocks, which are going to be negative anyway. So I think you got to look at international markets. You got to look at emerging markets, which I think are cheap relative to developed markets, and you got to look at commodities. You got to realize that energy, agriculture, metals, this stuff is underpriced, going a lot higher. And that means the companies that have these resources and that are harvesting them or, extracting them or whatever they're doing, they're going to see big increases in their earnings as they're getting higher and higher prices for what they're selling. So you want to have exposure there. I mean, that's what we're doing now with our investors. We've been positioning for years. In fact, I got positioned too early. I saw this train wreck coming from a mile away. Mm-hmm. So, I've been prepared for longer than necessary. But with the benefit of hindsight, it's easy to see, I buckled up too soon. But, the people that aren't buckled up at all, they're going right through the windshield, right? So, I mean, at least I'm protected. And, and you can start to see the relative performance of my portfolios. I mean, year to date, we're crushing it. I mean, a lot of my accounts are positive, a lot of my funds. And while the markets are imploding, and even now, if you go back 2 or 3 years, we're outperforming even some funds now 5 years after, lagging. But I still have a lot of catching up to do over 10 years. Mm-hmm. But I think by the end of next year, I'll be caught up, and I think I'll even surpass everybody over the 10-year time horizon, because things are rapidly, rotating into my direction. Mm-hmm. But, the good news for people who haven't made that rotation yet is there's still plenty of time to do it. U.S. stocks are still very overpriced. The U.S. dollar is still very overpriced. So it's plenty of time. Even though the markets are down, they're still way up over a longer time horizon. You can still sell these overpriced U.S. stocks and U.S. dollars and get into much better valued foreign stocks, foreign currencies, commodities, so that you can actually have positive returns over the next decade. Because the people who are sitting in the U.S. stock market are going to lose money. And in terms of inflation, when they try to take those returns and make them real, the losses are going to be phenomenal.
So, Peter, do you think this is a new era for gold? And on that value side of the equation, does this make the gold mining business, as long as they have decent returns and pay a dividend, does that make it more attractive?
Yeah, well, I don't think, gold has ever gone away. It's just kind of been on the back burner for a while. And, mm-hmm. Maybe like Bitcoin or something stole the spotlight for a while, but that's done. I think gold's going to come back in a big way as people recognize the box that not only the Fed is in, but the Bank of Japan, the Bank of England, the ECB. So all of these major fiat currencies are going to be losing a lot of value. So you got to get rid of them. And then what do you buy? Well, gold is the obvious alternative if you want liquidity and you just want to store value and you don't want to hold these fiat currencies. If you want to invest, you have a lot of other options. You can buy stocks, you can buy real estate. But if you just want to keep some dry powder, gold is your best alternative. What I think is going to be interesting, though, about the next decade, and it's ironic from the perspective of the Bitcoin people, is they were certain that Bitcoin was the end of gold, and it's not. I mean, maybe gold is the end of Bitcoin, because the best use case for blockchain is gold, not Bitcoin. See, what the Bitcoin people liked about Bitcoin was that it was easier to use as a medium of exchange than gold, except nobody uses it as a medium of exchange because it's actually very inefficient. It's very volatile, it's very expensive, it's very slow. So people just use it as a gambling token. But I remember early days of Bitcoin that they would say, well, Peter, what good is your gold? You can't go into a Starbucks and buy some coffee with your bar of gold. What are you going to do? Shave off a little bit? And, no, but you can do it with Bitcoin. Well, you can't really buy coffee with Bitcoin, even if the barista wanted the Bitcoin. I mean, it doesn't work. But you can do it with gold. That's the key. I could take gold and I can have it stored with a reputable third party who can then tokenize it, not the gold, but the ownership of the gold, mm-hmm. and break it down to fractions of a gram so that I can have it, on my smartphone, and I can go into a coffee shop and I can actually buy some coffee with my gold, and I can transfer ownership of that gold to the coffee shop instantly, quicker than I can transfer Bitcoin, for less money than I can transfer Bitcoin. But the big difference is when I'm transferring my gold, I'm actually transferring something. When I'm transferring Bitcoin, I'm transferring nothing. So, gold will actually work. Gold is going to work in the future better as money than it worked in the past. And it worked great in the past, but it's going to be work even better in the future, because instead of having paper currency backed by gold, we can have cryptocurrency backed by gold and get all the advantages of crypto with none of the downside, and all of the advantages of gold, but with even more functionality.
Mm-hmm. Well, as we're thinking about functionality, let's say of buying a coffee, does silver work better than gold in that case, or is it just that layer of
not anymore? I mean,
okay.
it worked better in a physical sense, and in fact, maybe copper even worked better. I mean, because when it started, you probably could buy a coffee for a few pennies, a cup of coffee, right? And some people use copper, or maybe they used nickel, right? But I guess when a cup of coffee became 10 cents, then it was a dime, because a dime was made of silver. But the reason that we used silver instead of gold was for smaller transactions, because silver was a less valuable metal. And so since there was so much gold or so much value in gold, if you were to try to mint a coin that was like 1/100th of an ounce, so you can buy something small, I mean, it would, you could lose it. It'd be too small to deal with. So you dealt with silver, and then even when silver became too valuable, you had to have nickel and copper, right? Because can you imagine how small a silver coin would be if there was a penny's worth of it in there? I mean, again, but with blockchain, none of that matters anymore. If I'm not going to be holding the physical coins, if I'm just going to be, using the digital ownership, then it's just as easy for me to send you 1/100th of an ounce of gold as to send you an entire ounce. And I don't need to worry about the coin, because there are no coins. The coins aren't being minted. There's just a big bar of gold in a vault somewhere, and we're all trading the tokens. The whole reason that they took gold and made coins out of it was so we could exchange them with each other in commerce. So if I wanted to buy something from you, I handed you some of my gold, and you handed me whatever it was you were selling. But I don't have to hand you the actual gold. I can just transfer my ownership to you. That's what they did with paper money. They said, hey, instead of carrying around your gold, just take these pieces of paper, because the gold is in a vault, and the paper is just a representation of the gold that you own. Well, it's even easier if we can transact in a digital representation of that gold ownership.
Peter, despite all of the, let's say, the pitfalls of cryptos as you see them, do you think that they've been valuable to help educate a whole new generation of people about sound money and the let's say, the devaluation of fiat currencies? And how do we educate this new generation about the value of metals as well?
Yeah, it's a mixed bag, because they understand the problems of fiat currency, but not completely. Otherwise, they wouldn't like Bitcoin either. So they've kind of been led astray. They've been told half truths, and so they have to kind of unlearn some of that and keep just the good part, which is, yes, fiat currencies are bad, central banks, all that, but then recognize the real alternative, the real hard money is gold, because these guys have been told that gold's worthless, gold's nothing, gold's a dinosaur, gold, so they have to unlearn all that negative, propaganda, really, anti-gold, because that's how they were, building a case for Bitcoin. And I've been afraid since the beginning, though, that this was going to backfire, that a lot of the people who, were worried about inflation and government and central banks were going to end up losing even more than the people who weren't, because they would have, jumped from the frying pan into the fire by going to Bitcoin. And then the government is going to end up using this example of people getting wiped out in Bitcoin as, hey, see, the free market doesn't work. The free market came up with Bitcoin. It was a whole scam, and you lost all your money. You need to trust government. See, our money is much better than the free market money. So I think it's going to end up doing harm, damaging the case for sound money, and government's going to exploit it to try to increase its power. But some people, yes, I mean, some of the people maybe will make the jump intellectually. Okay, yes, we still don't like fiat money. We still don't like central banks. We screwed up with Bitcoin, but now we understand that we should have just gone to gold all along. That's what we should have been advocating. And maybe with the crypto angle and the blockchain, maybe that'll be a happy medium where, they can look at, okay, yes, I can have my gold, but I don't have to lug it around. I can still have it in a wallet, with my own password, my own private key. And, I can, they may realize that.
Mm-hmm. Yeah. Well, Peter, I really appreciate your time today. I know we're coming up against the end of time. There's a million other things I'd love to talk to you about, like your taxation without representation, the reason you live in Puerto Rico, but maybe we can get to that another time.
Yeah, and if your listeners want some more, just tune into my podcast. I'm doing them, usually 2 a week, sometimes 1, sometimes 3. Depends on how much time I have really to do it. But on schiffradio.com or on my YouTube channel, I'm talking about stuff all the time. So I would encourage people to listen. Follow me on social media. My Twitter. I'm almost at 900,000 Twitter followers. So, but I got to get up to 1 million. So hopefully I'll be up there sometime in early 2023. But I do a lot of tweeting, and so that's one place to follow me. But I'm also on, Instagram and Facebook, so not as much. Even TikTok, you can find some stuff I have there. So I'm trying to make an impact using social media to get out there and to reach people, particularly younger people. But if you're an older person and you've got savings, you've got an investment portfolio, definitely try to reach out to my company, Euro Pacific Asset Management, before it's too late. I mean, let us get in there and redo your portfolio, get it out of a lot of these bubble assets that may have worked when the bubble was inflating, but are not going to work now that the air is coming out, and get into a much better portfolio for the new reality. And believe me, it's going to get a lot more real over the next few years. And most investors are just going to be totally blindsided by the events that are going to play out.
Absolutely. And, we do the same thing to try to help educate people on what's coming, and really appreciate you sharing your thoughts on what's coming and how to kind of get out of the way of it, Peter. Thanks so much for your time today.
All right. My pleasure. Take care.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.